Hey everyone and welcome back. Today we'll tell you how to make money when no one else is. You guessed it. Today's video is about making money in a crashing market. The current financial market crash is a once-in-a-lifetime opportunity for those investors with the right eye for investment. If you have invested in digital currency such as Bitcoin or even stocks, or even plan to invest in an asset in the foreseeable future, then this video is for you. Make sure you stay until the end to know the best possible ways that you can leverage the current bearish market to your advantage and make money when no one else is. Before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel and turn on notifications so you don't miss out on new updates in the world of investing. Down markets, bear markets, market crashes, whatever you want to call them, follow no rules. A market correction takes overhyped companies that have underdelivered down in value while also dragging down shares of strong companies which have performed well. As a long-term investor, your job, or at least the best path to accumulating wealth, isn't figuring out where the bottom is. Instead, it's sorting out the companies that have a bright long-term future, where today's price will hardly matter from companies that saw their share prices drop because they don't have sound business fundamentals. That's not always easy to identify when you consider some examples. Is Netflix a long-term market leader or a company with a huge spending problem? It may never be able to correct. Is Teladoc a market leader or a company that's too easy to copy? Will Zoom continue to grow when the world returns to something closer to its pre-COVID normal? As investors and traders, you have an important choice to make. Whether you're just starting out as a beginner in the stock market today, or is a pro trader with decades of experience, how you choose to make your next move matters the most. What is this next move you're making? The stock market crash is happening in 2022. The Nasdaq has toppled 24% year to date. Meanwhile, the S&P 500 is down more than 15%. Some signs are also pointing to an economic recession in 2022 or 23. Most retail traders and investors are feeling the pressure of a stock market crash and potential recession right now. The fact is, this isn't the same stock market as it was in 2020 or 21. The beginning of the pandemic saw a huge drop in stock prices. This left retail traders and investors in two frames of mind: panic or excitement. Those who chose to ignore the doom and gloom of mainstream financial media outlets were handsomely rewarded. In fact, analysts like Ariel's John Rogers subscribed to this idea that the pandemic implosion was a huge opportunity for investors and retail traders. He said this is a once-in-a-lifetime buying opportunity like '86 and '08. Elon Musk said that the US economy was probably in a recession, a judgment at odds with economists and available data, and cautioned companies to watch costs and cash flows. These things pass, and then there will be boom times again. Musk also told the All-In Summit in Miami Beach, according to a live-streamed video of his remarks posted by a Twitter user, it'll probably be some tough going for, I don't know, a year, maybe 12 to 18 months. Recession fears have been growing recently as a Federal Reserve tightens monetary policy to help cool down inflation that's running near its hottest pace since the early 1980s. So this begs the question, how can you earn money and survive better than the rest during a supposed recession? How do you get rich in a bear market? Down markets, bear markets, and stock market crashes put good companies on sale. If you have a company you believe in and perhaps already own, you can buy shares fully believing you are making the right choice for your future. Even if the bear market continues and stocks go down. Long-term means years, sometimes decades, and a share price falling because of market conditions or macroeconomic conditions allows you to buy shares and do what's known as a dollar cost averaging. That's where instead of waiting for the best price, you buy shares as funds allow, averaging the price you have paid to own stock in the company. A falling market actually allows you to lower the average cost per share of your best holdings if the share price has fallen below what you first paid. The challenge, and it's a big one, is that long-term investing means you hold shares for a long or very long time. Right now, that may mean your portfolio has taken a big hit. But if you believe in the companies you own in the long run, then holding them and adding to those positions makes sense. But what if you're a new investor, looking to make money during this crash? Here are some tips to help you cope with the existing market conditions, but before that, if you enjoyed this video so far, make sure to give it a thumbs up and do comment down below on what you think the future holds for the financial markets. Moving on. Number 1. Only invest money you can afford to lose. The golden rule of investing in a risky asset class like cryptocurrency is to only invest money you can afford to lose. When you see stories about cryptos that gain over 5,000% in a year, it's easy to get carried away in the hopes that you can see similar gains. But only a handful of cryptocurrencies produced those returns last year. With over 17,500 cryptos on the market, it takes a lot of luck to pick the ones that will skyrocket. Indeed, given the changing economic environment, there's no guarantee any coins will see similar returns in 2022. If you stretch your budget or borrow money to buy a cryptocurrency or a stock and the market falls, you could find yourself unable to cover everyday costs like groceries or your accommodation costs. On the other hand, if you only buy crypto with money you can afford to lose, a crash will be disappointing but not devastating. Importantly, you won't be forced to sell at a loss. Instead, you can hold on and wait for prices to recover. Number 2. If you're particularly interested in crypto, then invest in cryptocurrencies with long-term potential. There are many different attitudes towards investing. Some people are in it as a good short-term speculative buy. Others want to get in early on what could be a transformative asset. Taking a long-term perspective is a great way to guard against panic selling when prices drop. If you plan to hold for the next 5 to 10 years, then you're more likely to research carefully before you buy. Picking cryptocurrencies and stocks with long-term potential is not easy. Many promising projects did not survive the great crypto crash of 2018. Some experts say that 90% of cryptos would not survive a prolonged crash. Research can help identify cryptos with the best chance of long-term survival. Here are some factors to look for. Is it an established cryptocurrency? It's true smaller cryptocurrencies have a better chance of producing significant gains, but they also carry more risk. In contrast, better-known cryptos like Bitcoin, BTC, and Ethereum or ETH with higher trading volumes have a better chance of surviving a serious crash. Does it have a purpose? Think about what problem the crypto promises to solve and how many people might benefit from the solution. Look at what its competitors are doing and how it compares. If the market collapses, coins with no utility are more likely to fail. Does it have an experienced and reliable leadership? Management is key to guiding a project through difficult times. Conversely, if a project's leaders are anonymous, it's a big red flag. Does it have an active development community? If a project doesn't have many developers working on it, it may already be failing. Number 3. Make sure cryptocurrency only represents a small percentage of your overall investments. High-risk investments like cryptocurrency should only make up a small portion of your total portfolio. There are various ways you can calculate how much you want to allocate depending on your risk tolerance, your crypto knowledge, and the degree to which you believe crypto could outperform stocks. But the crucial thing is to diversify. If you avoid overexposing yourself to any individual asset class, you'll be able to handle it if one sector, like crypto, collapses. That's often easier said than done. But keep in mind that the stock markets are a 100% success rate when it comes to surviving crashes. While there are no guarantees when investing, it's extremely likely that markets will recover from any future crashes as well. No one can say for sure when the market will crash again, but it's likely there will be a downturn at some point. By taking these steps to prepare, however, you can keep your investments as safe as possible. Thank you for joining us today, and we'll see you next time.